Alan Kohler, welcome. Look, the Reserve Bank has upgraded its forecast for inflation. It now reckons inflation will hit 8% by the end of the year. That's a little higher than the Treasury forecast in last week's budget. I guess it raises the question, are the interest rate rises to date actually working?
Well, so far not so much. I mean, we still have a scarcity of labour. Retail sales are still quite strong, and obviously inflation is still a bit stronger than they expected. But the Reserve Bank is expecting inflation next year to be 4.75% and the year after 3%. So they are forecasting a pretty rapid decline in inflation, largely because of global factors, but also because of what they've done. I mean, this is a really unusual downturn, David. I mean, it's quite weird, in fact. We've had 7 consecutive rate hikes. The mortgage rate has gone from 2% to 5%. Yet we've still got scarcity of labour, really tight labour market, and strong retail sales. So it's really difficult to know how this is going to play out.
Well, you mentioned those retail figures. We saw them this week for September. It's at a record high. Consumers are still spending, particularly, it seems, on eating out. House prices have come off, but how would you explain what's going on in the economy right now?
Well, it's just a lot of pent-up savings that was from the pandemic fiscal stimulus. You know, there's about $250 billion extra in people's bank accounts. And so there's this kind of, I suppose you'd call it pent-up demand that is not yet satisfied yet. So I think that's still sort of working its way through. But look, this has been a very sharp increase in interest rates, and it is going to have an impact. There's no doubt about it. I mean, I think that there's only one more left, to be honest. We're at 2.85 now, 2.85% now. I think that really one more will do it. That's my opinion, but obviously there are a lot of different forecasts out there.
Well, the Reserve Bank, it says itself in the statement today that it does expect there will be further interest rate rises in the period ahead.
The reason they're saying that in the statement is because they want to kind of force businesses to pull in their horns and stop raising prices. They want to try to create this this environment of slowing the economy and get everyone thinking about that. So the last thing they're going to do is say that they're going to only do one more. They're going to keep saying that they're going to keep putting them up until they stop. There are some. I spoke to a bloke this afternoon who said that interest rates are going to 4.75%. This is the cash rate to 4.75%. I mean, if that happens, there'll be a shocking recession. And the Reserve Bank did say in its statement today that it's absolutely determined to get the inflation rate down to its target, and it's going to do whatever's necessary to achieve that.
We'll see. Alan Kohler, thank you.
Thank you.